Hello, hello. How we doing, everybody? What's up, Joe? Can you guys hear me all right? Quick little sound check. Just drop me a message in chat if you can hear me. Awesome, awesome. Well, I hope you guys are all doing great, and especially with the day we just had, which, again, as I said in general a second ago, right, we'll deep dive into it as we always do. But on days like these are the type of days where a lot of traders have a lot of I don't want to say problems, but let's just say most people have a negative result at the end of the day, right? Because as we anticipated, we were looking for a raid somewhere, but with whether it's because of fundamentals like the Google earnings or whether it's because of whichever reason, right? Today we had a huge down day. I believe it is one of the biggest ranges in a single session, right? Talking clearly about New York in a single session that we've had in the past few years. So definitely was a big fucking day is the easy way to see it. As you can tell just from a daily chart, we did not even trade above open. And even if we use settlement as close, since we gap down on open, it doesn't matter, right? I believe I had settlement as close. Oh, there we go. So you can still see the same result, right? So definitely a day where it was harder to navigate because the whole bias was, usually it's fuck your shorts, but now it was fuck your longs. We were just going down, down, down. So very volatile market today and very aggressive movement. There's no point to look at higher time frame PD arrays, right? As we discussed, once ES was going to flip that open, we wanted to see expansion through. So I had clear objectives on ES still to frame a manipulation, right? Which is what I was looking for, right? Manipulation lower, retracement into the range was not needed on ES, but was needed on NASDAQ, at least so I thought. We had two clear objectives along the way to for ES specifically, which both were met with now what was it on ES? 123 handle range. That is crazy for ES specifically. And on NASDAQ, right, we continued to our downside objective previously mentioned. So you definitely had Friday's low, which was your main objective, followed by sell side liquidity, right? Liquidity down below. And more specifically, if we head over to a weekly chart, I don't remember who it was, but someone talked about it in chat. And yes, as stated beforehand, I don't remember if it was in the Outlook or just in chat, we had our bullish order block, weekly bullish order block, which was our main objective, which we did not yet reach for today, but we were looking for lower. Now, if we dive down more specifically to the 1 hour, you'll notice one very specific things. We had a large new day opening gap, which just to showcase 63 handles. Anything above 40 for me is a large gap. So we had a very large gap on open. Now, when these gaps happen, as again, I talked about it a lot during the day, I was a little bit more active today. Well, you're going to see one of two things because when these gaps happens, it means that settlement price and the now opening price had a large difference, which can have a lot of causes, right? As we talked about in the beginning, but it either means we're going to go in one direction away from the gap. So in the case of a gap down, like we've seen, we're either going to expand lower away from that gap, or we were going to consolidate within, forming expansions through it. So you could always use the new day opening gap as an objective. You can back this as much as you want. You'll notice it definitely. You had signs that it was going down on a lower time frame, right? Lower time frame SMT. But the main thing here is if you notice on the hourly chart, but more specifically on the 15-minute chart, any bearish inefficiency was respected. Even closing above, right? Like for example, closing above this bearish fair value gap that was formed right near midnight open, you'll see that we just respected the one above that was a little higher, more specifically in the premium of this range, right? So any bearish inefficiency was respected. So clearly a bearish day. Now I told you guys I was looking for a raid following a long. So I was trying to long today. I tried 2 longs, ended up getting stopped out on both, even though on the second one I should have taken a little profits, but got stopped out on both, took 1 short, and it ended up great. So once you notice, you do have to be ready to adjust, right? And for most traders, today was probably a horrible day where trying to catch the bottom and stuff like that. And I just want to take a second to note that how much people must be panicking right now. We had a 6% negative day, I believe it was. I'll check. Let's say I look at the close more specifically, and I look all the way to the bottom of the range. So 2.5% for the S&P is not too bad, but it was slightly larger on NASDAQ with 3.9%. So 6% total, pretty much. So definitely a lot of movement. A lot of people are panicking, wondering why. Don't question the why. Just be able to recognize that as traders, who hopefully you guys can feel this way, but I know that's how I felt today, have come a long way and can see days like that and not be scared, not question anything. Just say, oh, well, I could have traded that, right? It's any trade day, just like the previous one, just like the next, right? So definitely don't, if you've had terrible results today, just remember that it's not about what happened on the day, right? It's about your personal performance as a trader. So did you get lucky today? Did you manage to be on side? But why, right? Because you can ask a lot of experienced traders and they'll tell you, well, shit, I don't know why I dropped. I had my lower objectives, right? I knew once it started dropping, I knew where it was going to go, but I don't know why I dropped. I can't tell you. Like, for example, myself, I cannot tell you. But it does not mean that we didn't have opportunities. So we're going to dive into them. Now, on a regular day, seeing as the range was already, I believe it was close to 300 handles when we got to New York Open. Yeah, 350 handles. So on a day like this, well, technically at the open of 9:30. So yeah, 250 handles. On a day like this, that's already done 250 handles. I'm not gonna expect much from the market. All right, so I'm always gonna be having some smaller objectives, just expecting less specifically from the market. I'm going to remove this first objective, which got hit during London. So now coming into New York Open right here, I was mainly looking for a small scalp, get in, get out. But I was looking for a long. I was looking at a possible London framework where London highs remained open, relative equal highs right here. This consolidation specifically was a clear objective for me at the beginning. I thought, okay, well, now we rated. I did not look the earnings. I did not consider any possible outside outcomes, but this trade was still a valid trade, so I will be going over it with you guys. We had 9:45 news as well, which is something we cannot forget. I believe we had PMI, PMI or PPI, right? Only news at 9:45, only high impact news at 9:45. So waiting for the news, then we had a Judas swing lower with no SMT, but we had divergence before, all right, just based on strength specifically. But what we have to notice is that we did have divergence, but on the highs, right? See how NASDAQ goes higher here. Well, here, let me put it a color that's a little bit easier to see. How about red and like this? Awesome. While ES is going lower, this is a swing high. So the definite divergence right after the news, right? Little move higher. So the correct interpretation here would have been to say markets aren't correlated. Let me take a step back. But I decided to try and long this breaker block right here with this fair value gap. I was looking at something like this, which honestly, thinking back, the only thing that I did wrong was basically the SMT. It was late for me noticing. I noticed it after, got stopped out right here. But looking back at this trade, I still believe it was a valuable trade to take, right? So sometimes you get stopped out. It's part of the game. You will lose as a trader. One thing all traders do is lose. Not all of them win though. So you got to be able to take that balance. All right. But definite loss for me there. If we dive further into price, you'll notice that it just keeps going down, right? There's nothing much to say about today other than it just keeps going down. Non-stop, going down, going down, going down. Now, right after this failed long, I was still looking to long, which was my mistake. I should have reevaluated, considered every possible outcome, but this rise model appeared, right? Which is utilizing the same range to find for a breaker block. Now, this fair value gap is not in close proximity to this breaker block, right? But we got to remember that if we consider the breaker range, it is from this swing high to this swing low. So I'm looking for a fair value gap that is near this specific swing high to swing low. So even though the breaker is all the way up here, I do consider this to be a unicorn, and it delivered beautifully, right? After retesting that zone for a few times, and you would have your stop, you have a fair value gap here, inverse fair value gap here alongside this order block. So this swing high, quite a large stop, 33 handles, but if you see the result, clearly wasn't too wide to provide good outcomes today. We just look standard deviations. Why? Because there's nothing clear to the left to be targeting other than intermediate, like 15-minute swing points that are from 2 months ago, right? So I do not care about that. What I like to use are algorithmic levels. So I like to utilize the quarters, more specifically, of higher time frame arrays. At this point in time, we were already trading below the low of this fair value gap. So I looked at the following fair value gap, and you'll notice that price references to these levels very clearly. So what you want to see is basically you want to see price expand through one level, which will give you insight that it will reach for the next one. And then you want to see price respect that previous level to go target the other one, and following that logic along the way, right? What do you want to see? You want to see a staircase, which was provided in this specific case. Now, is this the best explanation of how to use higher time frame PD array quarters? No, but that's not what we're doing today, right? We're reviewing. So definitely targeting the CE of this gap with confluence from the breaker block standard deviations was just a great objective. Nonetheless, these trades are very much more, what's the word for it, discretionary as to your objectives, because you're not trading, you don't have sell side of the range, the other side of the range, pretty much, which in this case would be buy side of the range, and then you're trading a reversal. In this case, you're trading a continuation. You have nothing to the left. You're expecting expansion. So I will use higher time frame levels alongside standard deviations to define objectives, like the CE of this daily fair value gap, and then hold along the way. A final objective could have been 4 standard deviations, because it was pretty hard to expect a 322 handle move after we already ran for 350 handles. So would I have expected it to go there? No, but it was clearly a trending day. So just making sure you guys can still hear me, because I saw a quick message. Did audio cut out? Justin, wait, can you guys hear me right now? Awesome, awesome. Okay, I thought you guys were saying yes to the audio cutting out. All right, so I'll keep going. Sorry, that put me off guard a little bit. What I was gonna say is that when you do have a trending day, and after seeing it push 400 handles and still provide low resistance price action like this, through personal experience, I've noticed that it's just gonna keep trending. That's all it's gonna do. It's gonna trend lower or consolidate. So I considered that trending day. You just hold, right? You hold up until when? Up until close. 4 specifically, right? So I would hold until 4. You saw that we reached our higher time frame objective. That would have been a full cash out. There's no point in holding for the 6 extra minutes that you're gonna get here. And ES also tapped it. It did not take out the liquidity at this level, but it did tap into the specific level. Finally catching up. Oh, that's the wrong thing. Finally catching up with NASDAQ and invalidating this SMT, but now forming new SMT at these levels, right? I don't know if you guys remember. I feel like I reference to it a lot, but it's because we are still a small community. Not a lot of people are going to see these videos, and not a lot of people are present in these calls. But go back to the weekly outlook or the price action review where I share the logic about combining SMT with the IPD data ranges. I did showcase it on a daily, weekly time frame, but it does not mean that that logic is limited to those time frames. This is something I found. I think it's the only thing I can say that I know that no one else knew. So I was pretty proud of that at the time. Now I don't care. So just go look at it. Find high probability objectives with that, please. It is too good to not be shared. But enough of that. Just a quick little side note there. I would say that 4 standard deviations was a more realistic final objective. And again, since it's a trending day, hold, trail your stop loss, and allow your trade to go through, to keep going. I mean, sorry. Now, other than that, I believe it was Sausage who talked in chat and showcased that he took this short specifically. Looking at the lunch range, as you can see from the bottom here, 12 to 130, you have lunch low. Looking at our lunch rate, right? This is not the first lunch rate we look at. There are multiple different variants, but this time we refer to noon to 1 range. And then you can see a definite raid of the highs of that specific consolidation, which was the lunch consolidation. Can frame the sweep right here, right on that range, forming our breaker block. Once we trade back below, and on the next candle over, we retraced into a unicorn. With a stop at these highs, you would have had some nice little drawdown after being up, what was it, 1.4R. So you had some drawdown, you had your scare. Honestly, on a day like this to me just looks like a break-even trade, but I did still want to showcase it since we had some people in the Discord take it. Lunch range, pretty textbook, but in terms of trade management, I would have been break even for a while here, and I would have much more preferred to take the break even on a day like this than to live through that drawdown, even though it was very short lived, right? 12 minutes. And of course, held through this, and you can utilize standard deviations again of the breaker. You'll notice that they just always align because that's how they work, right? You don't even need to check them. They do. It's just that simple. And at some point, you'll start seeing them and knowing in which areas it's going to start aligning, right? Relative equal lows. I know that the market, whenever it reverses at specific key times and price and forms this pattern, that the next low resistance liquidity will be proportional instead of being exponential, which is just how the market moves, right? Proportions, I mean, this is the same range as two times this is this level, right? We aren't adding more. We aren't using exponential values to calculate possible deviations in price. We're using standard deviations, which means they are proportional. Just in case you guys weren't familiar with utilizing these words in that concept. So again, pretty straightforward day, right? It just went straight down. Personally, I wanted to see longs. I wanted to see some form of retracement into our higher range. Wanted to see us dive into this, probably trade higher. As I stated in my midweek analysis, right? That's exactly what I was looking for, and I didn't get that. I got a long opportunity, which stopped me out, and wished I would have been able to adjust to the market right away and catch the short, but I catched a later short, a continuation entry of the move I missed, following another long loss. So 2 losses and a win for me today, making me at 400 PNL, which is pretty small, but I'm just happy I survived a day like this after taking 2 losses early during the day due to a mental mistake, if I can say it, a personal mistake compared to a model mistake, right? So after just spewing all of this at you guys, right, and mostly about the psychology part and everything. Just wanted to spend the time to say that if ever it went bad for you, don't don't claw to that idea, right? A lot of people will tell you, like, remember how shitty you felt and make sure it doesn't happen again. And even I used to do that until I realized one single thing: single day, single trade, even a week, it doesn't matter. When we're in this game, we're playing long term. And when we say long term, I don't mean, oh, I want to make profits this month. Who cares? Even if you have a whole month in negative, who cares? The next month will be positive and recover more than the losses you took the previous months. So what's important then? Risk management. Making sure you don't let your emotions take care of your P&L, and prop firms make you forget that. Honestly, not the emotions part, but the risk management. Like, they just make you forget because they tell you you can lose 3%. On my personal account, when I first started my first month swing trading on it, I was down 10%, and I don't care 'cause I'll make that back in time. I know that. So am I going to over leverage? No, because that will just put me more in the hole, right? So you got to go slow, got to get back. And if you did good today, well, good job, right? Right? If you had a short bias, you definitely printed some money today. So, on that note, did you guys have any questions, whether it be about today, me, my model, any type of psychology? Really don't mind spending a little bit more time today. It is not something, just for the question, how do you know when a flip bias, when sell side and buy side is ran through? Well, per your description, when sell side and buy side objectives, I'm going to add that part to your question, are taken instead of ran through sounds a little bit bad, but when they are taken, uh, what it means is that you are going to search and destroy, right? And I'm not talking about your 1 minute swing high and low and the liquidity above these levels. No, I'm talking about your higher time frame objectives. For example, if I go back to the daily chart, if we were today to go take out this high and then take out this low, I would never consider a long, right? Because we swept the highs to go target the low, so I'm not going to play a double reversal. How often do you see price do this? This would mean that price is expanding, which is a search and destroy profile, unless you're trading a long retracement possibility, but that's going further. All of what I'm saying right now is purely for advanced traders. So it's not even about recommending. Please do not do that if you don't at least have a year of being in front of the markets every week. And by that, I don't mean demo trading. Well, demo trading is pretty much the same in my opinion, but I don't mean like just looking at charts. I mean trading, right? Because it takes a lot of fucking discipline to be able to flip your bias, to have that rule set where you are allowed to flip your bias and not fucking tilt, right? And not lose control and flip your bias on every single trade, right? Oh, I get stopped out my long, so now I'm short. No, because you're going to mess up everything. You're going to falsify the data from your model that proves your profitability. Only bad things can come from that. But if I may give you a little insight, little brother, then I would say that whenever I flip the bias is when all of a sudden there is more of a possibility of lower prices than higher prices. Not even a question of probability, actually, or possibility, right? Same words pretty much. It's not a question of probability, it's which trade will offer the highest probability. So at some point, I just disregard bias and I say the highest probability shorts are here and the highest probability longs are there. If I long, here's my objective. If I short, here's my objective. Do I have an A plus setup for both of them, which means a clear objective, clear direction, clear order flow? Yes, then I take that trade. So I don't really align myself with my bias. I have an idea of where it's going. I have my objectives, and I understand that it may retrace before going to my objectives, and it may just expand in one direction uncontrollably and just go directly to my objective. So I'm ready for both possible setups, whether I'm trading a higher time frame retracement or a higher time frame expansion, which all boils down to lower time frame expansion. So all that to say that only trading in direction of your bias is a great advice for beginners, and it takes a lot of practice and a lot of experience to be able to allow yourself to flip your bias and trade both directions in the same session, in the same day. It's a lot of mental strain. So I will not recommend it, and I will even tell you guys that you shouldn't do it. Now, you guys are your own people. You do what you want, right? Does that answer your question? Went a little sideways there for a second, but I'm back on planet Earth. Awesome. Did we have any other question, guys? All right, well, not seeing anything. I wish you all the best of nights, and we'll see each other tomorrow for another price action review. And just before I leave you guys very quickly, remember, after a large range day, we expect a small range day, and after expansion, we expect consolidation. So after a 750 or whatever handle day, 632 it says here, but I'm using New York Open. I want to use the close of the previous day. 813 movement if we use the new day opening gap, the close of the previous day, sorry, 777.5. All right. So very clearly, what do we expect tomorrow? Shitty PA, or possibly a continuation lower, but shitty PA. So be careful, protect your capital, and wait for Friday. But we'll see each other tomorrow for another price action review. Anyways, you guys have a great night.